a box of first edition Pokemon cards selling for $200,000. The cost of a monster box of Silver Eagles selling to famous YouTuber Logan Paul. A banana duct taped to a wall posing as artwork, selling in, I think, November or December 2019 for $120,000, which another artist then grabbed the banana, and ate it. I'm laughing trying to finish this. Artists, trying to finish this opening monologue here. Artists who are still alive, who have very little credentials, their artwork being bought and paid by hedge fund managers and other affluent people for tens of millions of dollars. And then recently, in the last couple months, you have Mike Trout, a Mike Trout rookie card, and I'm a big baseball fan. I love Mike Trout, but his rookie card just sold for almost $1 million. So normally, these types of things, this insane levels of asset price inflation on things like artwork, Pokemon cards, baseball cards, other collectibles, does not happen in a deflationary environment historically. However, my friend George Gammon did a very good video on the Cantillon effect. Facebook, unfortunately, is censoring his video. If you go to the Wall Street for Main Street Facebook group, you will see how they're censoring it. I also put screenshots on my Twitter. Facebook has blocked the video title and also the thumbnail, so less people will click on it. So this is the censorship that we can expect now. But historically, these types of things, this is the Cantillon effect in action. The rich people, the politically connected, the rich class, the people who are benefiting from the currency and credit creation first, who are making all these extra millions or billions of dollars off higher stock prices, higher bond prices, higher real estate prices, they are spending money like a drunken sailor on all these extra exorbitant asset prices. It's very similar to historically, there's like the Beanie Baby bubble. There's an excellent, and people do tend, or the Tulip Bulb mania. The Tulip Bulb mania is probably the better historical comparison, but the Beanie Baby bubble, and the reason I was going to bring that up is there's an absolutely excellent book about things that are actually not rare and how they can still be in a bubble by the great Beanie Baby bubble. The amazing story of how America lost its mind over a plush toy, also of how the owner of Ty Warner, how he channel stuffed and created artificial supply constraints with channel stuffing and created demand for these Beanie Babies and created an absolutely enormous bubble, and the eccentric genius behind it by Zach Bissonette. Book came out in 2016. It's available on Audible audiobook. People always ask me for book recommendations. It's a very entertaining read. If you want to learn about the Beanie Baby bubble, he also, I think, talks in there about the pet rock and some of the other crazy toy fads where the price of these Tickle Me Elmo, some of the other things where these things have, the prices of these not so rare collectibles have gone absolutely crazy. In terms of speculation, though, this, like, some of these prices on some of these collectibles and assets that aren't really rare at all has gone absolutely insane. Another great financial history book, I just bought it, I haven't read it yet, but all my friends who are very well-known investors recommend it all the time, is Devil Take the Hindmost, A History of Financial Speculation by Edward Chancellor. But the Cantillon effect, Richard Cantillon explains this the best. The people, the economic and politically connected that have benefited from all this asset price inflation in stocks, bonds, real estate, they have all this extra cash. So that's why they're buying art. Some of them might even figure out how to write it off or donate to charity. They're going to figure out how to overpay for art. They're going to overpay for all these crazy things. And that's part of this income inequality that we have, the wealth gap, is because of the Cantillon effect. My friend George Gammon, he mispronounced, he called it Cantillon. it's Richard Cantillon. He actually had a very amazing life. At one point, many historians, and there's a great episode on this if you want to go back, I think sometime in the last year on the McIlvaney Weekly Commentary, there was an entire episode with a historian on Richard Cantillon and the Cantillon effect and his life. At one point, I think Cantillon was actually the richest man in the world. And his economic writing, his economic analysis was so good that Adam Smith actually plagiarized an entire chapter of Cantillon's essays for The Wealth of Nations. So the Cantillon effect, it is a very underrated, it is a very important part of the Austrian School of Economics for how governments and political insiders and economic insiders and central bankers and their friends and bureaucrats all figure out new ways to steal with stagflate and tax and lie. So let's talk about some of the stories here. So the ultra rich collateralize fancy artwork and penthouses to, quote, access cheap money. This zero hedge story came out on October 3rd. Mortgage lenders have set aside billions of dollars for future defaults as millions of homeowners are in forbearance. This year, lenders have quickly tightened standards for average Americans, only dishing out loans to the ultra rich. JP Morgan is one bank that has temporarily stopped accepting new home equity lines of credit, or HELOC, which is short for home equity lines of credit, applications due to a surge in delinquencies, with ordinary folks unable to access cheap credit, even though rates are historically low. The ultra rich this year have been collateralizing everything from artwork to New York penthouses to obtain cheap loans. So that means they're willing, because the prices of this artwork, the prices of these New York penthouses are so high, they don't care if they lose them in a sale, if they have to sell them, because they're pulling equity, they're pulling value out of these things. We first highlight to go buy something else, or maybe to go spend more like a drunken sailor. We first highlight it, or maybe it's to go buy additional bunkers. Maybe they're going to diversify bunkers from New Zealand to somewhere else. I'm not sure where else the rich are buying bunkers. I've seen all this stuff in New Zealand. I'm not sure where else they would be buying some of those doomsday bunkers. We first highlighted this phenomenon. Maybe they're just going to copy what Dick Costello, the former CEO of Twitter, posting who's worth $300 million. And normally that guy, he's so rich, his biggest problems in life are figuring out what next to invest in or how many Instagram models he wants to have sex this week. And then he's posting about the communist revolution and how he's going to be filming people getting murdered. All the capitalists getting murdered. What a hypocrite, right? What a hypocrite champagne socialist. What a crazy world we live in. We first highlighted, back to the article, went a little off tangent there, but it's appropriate given how ludicrous I'm talking about these asset prices with Pokemon cards, a box of Pokemon first edition Pokemon cards, and I have if Logan Paul ever sees this video or someone knows him, I have an entire set of first edition Pokemon cards from like 25 something years ago. I think they're saved, they're protected, I didn't know they were worth that much money. But if Logan Paul wants to get in contact with me and he wants to write me a big check, I'll happily send him most or all of an entire set of first edition Pokemon cards. We first highlighted the phenomenon back, that was a long time ago, that was 25 years ago, so it's a long time ago. First highlighted this phenomenon back in March during the dark days of the virus pandemic, days after global equities crashed and credit markets locked up. We noted, quote, ultra wealthy are increasingly requesting financing against fine art as a way to build liquidity. So maybe, just maybe, over the past decade, the ultra-rich became massive asset gatherers, there's bad grammar in this Zero Hedge article, using money that cost basically nothing with the Cantillon effect and central banks basically transferring wealth to the people rich and politically powerful, that cost basically in New York City and DC, that basically nothing to purchase fancy artwork, $1 million Ferraris, rare wine, and overpriced penthouses in top metro areas. Also Pokemon cards, baseball cards, collectibles, apparently artwork of artists that are not well respected, but if you're a billionaire hedge fund manager, what's another 10 million or 20 million? Especially for $120,000 for a banana taped to a wall. My God. And overpriced penthouses in top metro areas. That is because when shit hits the fan, these folks can leverage these assets to tap into cheap credit. And since these assets don't trade on major exchanges and price on a daily basis, aren't subjected to wild volatility swings. Bloomberg is out with a report that JP Morgan has issued a massive $42.5 million loan on a New York City penthouse owned by a Russian billionaire's family. The penthouse at 15 Central Park West is worth an estimated $88 million. Russian billionaire Dmitry Bolovev tried to sell the property but failed at finding a buyer, has decided to leverage the asset to tap into cheap credit with an interest rate bearing only 2.9%. The family tried to sell it a few years later as prices for ultra cheap ultra expensive, properties in the city had started to slip. Instead, they chose to leverage the asset, Bloomberg noted. Bloomberg provides several other examples of wealthy people taking out mortgages on their penthouse. Quote, outdoor advertising mogul Drew Katz obtained a $15 million mortgage in August for a New York penthouse that he bought 4 years ago for $22 million, filing show. In April, hedge fund founder Dan Ock obtained a $50 million mortgage for a home on Manhattan's Billionaire Row that he acquired last year. The following month, a U.S. company controlled by Mexican heiress Karen Virginia Beckman, part of the family behind Jose Cuervo Tequila, received a $19 million mortgage for a condo it bought 3 years ago in the same area. This signifies that banks are willing to lend to the wealthiest clients, enabling them to weather the virus pandemic better than the average folks who have primarily had their credit lines reduced or entirely cut off. Quote, rates are low, and so clients are looking to take advantage, using some form of debt to be able to access cheap money, said Casey S. Creedman, a financial advisor at the Broad Group, a New York-based unit of UBS Global Wealth Management. Remy Frank, head of BNP Paribas's Wealth Management Key Client Group, said, quote, banks are happy to lend to very rich people. The richer you are, the more you borrow. Because they know, ultimately in the long run, stagflate, tax, lie. Central banks will either buy up that corporate debt that's been issued since March and April, well, mostly since April, when after the Fed did all those press release manipulations. So all these large corporations that are quote unquote investment grade but not really, or junk bond, could sell another $1.3 trillion, over $1.3 trillion worth of more corporate bonds, investment grade corporate bonds, junk bonds, leveraged loans, other stuff that the Fed will most likely have to buy back later. But a lot of rich people bought those bonds, front-run those bonds. They bought those bonds in February and March when they were crashing, knowing the Fed would probably manipulate that market or buy them back later eventually. And we've seen how that has turned out with billionaire Ronald Perelman's leveraged empires that recently collapsed in a deluge of fire sales. More or less, the pandemic is exacerbating the wealth inequality gap as the rich survive on cheap credit. Simultaneously, working poor households have experienced less jobs, food insecurity, and depletion of emergency savings. So I have a number of other articles here related to this topic. Sotheby's sales plunged 25% despite bored millennials bidding online. So artwork has taken a little bit of a break, but overall the trend for years now has been insane prices on some of these art sales. Just insane for either ridiculously ugly and disgusting artwork, and normally it's from an artist that's not well known or respected. And you have these hedge fund managers just buying this garbage. And then also now collectibles and now Pokemon cards. So that's why I thought I would do this. But these are all, this goes back to the Austrian School of Economics and the Cantillon effect. These are all symptoms of fiat currency and credit. And there is way too much currency and credit sloshing around all over the globe. Way too much currency and credit. There is an article behind the Patreon, my Patreon, talking about central bank balance sheet growth. And all this currency and credit, they just keep pumping more and more and more in. I think the new counterfeiter, the new fastest percentage growing counterfeiter is the Bank of Canada now. I was shocked to see that. There is an excellent chart from Tavi Costa, hedge fund manager Tavi Costa. Normally these types of things do not occur in a deflationary environment. Some prices may be falling, there may be some defaults, but normally these things do not occur in a deflationary environment. They occur in stagflate and tax and lie, or on the road to hyperinflation. With this type of craziness, like Tulip mania and all these, I don't even know if you can call some of these things assets. I'm maybe use air quotes here. Just more craziness. My friend Christopher Irons at QTR Research, he did an interview with Scott Lynn, why the art market skyrockets. This was from May 28th. Why the art market skyrockets as the Fed prints trillions. Art collector, Masterworks founder. So I'll put this, it's a long podcast. I'll put a link to it in the information and description section if you want to listen to that. So the Cantillon effect talks about distortions. Okay, George Gammon in the Cantillon effect video, excellent one that he released yesterday. Well, he released on Thursday. Now it's technically Saturday, since I'm doing this live stream late. but the excellent Cantillon video, the Cantillon effect talks about distortions. And $200,000 for a box of first edition Pokemon cards, that's a perfect example of distortions. Almost $1 million for a rookie card of a great Major League Baseball player. He's going to be Hall of Famer, but he's still playing. It's autographed too. But almost $1 million for a rookie card of that, I would say that's a distortion. There's too much currency and credit sloshing around. Some hedge fund manager, rich person has made too much money and is bored and is buying these things in online auctions. Or unless maybe like Sotheby's or one of these other auction houses is doing some type of social distancing in person with masks and stuff. I think most of it's online though. Just craziness. Shashank Prabhu asks, have I heard about Pokemon cards selling for $30,000 to $250,000? Hey, if anyone wants to pay $30,000 to $250,000, I have some really old first edition cards that are in some plastic protectors. So I bought these things a long time ago. They're just protected and just sitting there. So yes, this is the modern day equivalent of the Beanie Baby bubble. We had in 2017. We had the initial coin offering and altcoin shitcoin bubble, and there was a lot of fraud behind there. So normally there's a lot of fraud involved in these things. I know someone that worked with John McAfee at the time, and supposedly McAfee was charging over $1 million in Bitcoin and other, I guess, bribes. That's what I heard. I mean, it's second or third hand information from what I heard, but I heard McAfee made in a very short amount of time, under 2 years, from the 2017 initial coin offering fraudulent bubble and altcoin shitcoin bubble. I heard John McAfee made over $100 million in about 2 years, just pumping the crap out of a lot of these initial coin offerings. Now you're starting to see some arrests for that, but we'll see what really happens or if it's just a fine. Supposedly they're going after McAfee now. They've had the Securities and Exchange Commission and some of the other regulators have had some of these celebrities, some of these rappers and professional athletes and movie stars. They've gotten some of them on some of these initial coin offerings from 2017, but normally they just paid a fine and did not admit any guilt. So normally with these crazy types of things, there's fines. I don't think for the pet rock bubble and some of these other toy scams. Well, I don't know if they're scams with these Christmas toys, but there's normally supply shortages because the toy manufacturer underestimated the amount of demand before Christmas. But it's just craziness. It just shows human nature that for a brief period of time, people will act more than usual. People will act completely and totally irrational and pay unbelievable amounts of currency for things that are not really rare. I didn't say anything bad about Bitcoin. I said the initial coin offerings and the altcoin shitcoins. So for the people in the comment section there, I didn't say anything bad about Bitcoin. Actually, John McAfee, I believe, was asking to be paid in Bitcoin because he trusted Bitcoin, but then he was pumping a bunch of initial coin offerings and shitcoins and laughing about it. There's old screenshots of this. Someone took a screenshot, they direct messaged him on Twitter, and he said he wanted over $1 million worth of Bitcoin and then like 10 or 20% of an initial coin offering so he could pump and dump. There was a screenshot of that. There was a screenshot of this going around. Alan Greenspan called this irrational exuberance, but there's old books about financial history, like Madness of Crowds. I'll look up the book. I bought it. I haven't read it yet. Extraordinary Popular Delusions and the Madness of Crowds by Charles Mackay. Mackay. It's spelled differently. That's available on Audible audiobook too. So if you want to understand human nature, those are some good books to read. So Devil Take the Hindmost, The Great Beanie Baby Bubble, and then the other book I just talked about, Extraordinary Popular Delusions and the Madness of Crowds, are to understand investor psychology, human nature. The Tulip Bulb mania is covered in Devil Take the Hindmost by Edward Chancellor. Because Grant Williams interviewed him, I think, in the last month or so on his free podcast, and he talked about the Tulip Bulb mania in there. Matthew says the 2017 crypto bubble was crazy. Shitcoins going up 10x and then crashing. I think some of them went up a lot more than 10x. Some of them were pumped by like some rappers and celebrities. Some of them went up more than 10x, but there was like pump and dumps and a bunch of other stuff in there. And it looks like the regulators, the government bureaucrats and regulators, I think very few people are actually going to prison. Like, I think they're trying to arrest John McAfee now. I saw that going around social media in the last couple days, but we'll see. Maybe they'll just have him pay a fine and he won't have to admit guilt, because that's normally what these celebrities are doing right now, who were involved in the initial coin offering scams. They normally have to pay a large fine and don't have to admit any guilt. Good question here from Jacob. Do I think gold will deflate then go up, or just go up from here? It's pretty obvious in the charts and the price action that the best gold stocks and gold is being bought on every dip. So anytime there's a paper price smash in the gold price, in my opinion, it is bought very strongly. Kevin says McAfee was at a Bitcoin conference you attended in Texas a few years ago. He was bizarre. He was probably on drugs. There's a lot of videos. My buddy Aaron, shout out to Aaron because he's probably listening, or he'll listen to this after the recording's over. He'll listen to the replay. There's a lot of videos of McAfee like coked out and on a lot of other hardcore drugs. So just absolute craziness going on right now. And again, I'm going to repeat myself. These are not examples, case studies of a deflation. These are examples of the Cantillon effect from the Austrian School of Economics, of the economic and political elites getting extra currency and credit, making enormous profits for decades now, but especially since the 2008 financial crisis and the Fed manipulating interest rates ultra cheap. And then all these economic and political elites who the ones here in DC are overpaid, and the ones on Wall Street are able to borrow for cheap, the hedge fund managers, the investment bankers, all those high-level financial professionals, and they're making unbelievable sums of currency, of profits off stocks, bonds, and real estate. And you're starting to see examples of just wasteful behavior, irrational wasteful behavior, grossly overpaying for things that are not really rare. You could have a monster box of American Silver Eagles for the cost of a box of first edition Pokemon cards. I think I would rather have the monster box of American Silver Eagles. How about you? Okay, so if you want to research this topic more, if you want some more laughs, if you want some more laughs about this, when people say there's only deflation, there's no examples of inflation. If you want some more examples of the distortions, the Cantillon effect of all this currency and credit sloshing around, of rich people wasting their profits on exorbitant things, I will put them below the video in the information and below the video. I'm still laughing at people overpaying for some of these things. I will put them the article links and the interview that Christopher Irons at QTR did with the art dealer about the art bubble below the video in the information description section. But welcome to Dystopia. And again, the Cantillon effect is part of stagflate and tax and lie, because there is all this currency and credit, and it is sloshing around in a lot of different things. And then you see bubbles, just tulip bulb mania type bubbles for short periods of time in certain things. Maybe it's going to be, well, a couple years ago was initial coin offerings and altcoins and shitcoins, that some of them went up over 10x and then crashed, and then there was legit proof of pump and dump schemes. Or then it was Beanie Babies, or in the 1970s it was pet rocks. And now we're starting to see examples of other assets that are not really rare starting to get bid up by, I guess, hedge fund managers or people who actually have done well financially during the pandemic. Okay, so if you want to take a look at a lot of my articles behind the paywall for Patreon, I have over 1,000 patrons still. And unfortunately, I think a lot of my YouTube videos, YouTube's just taking more and more of the ad revenue. The last like 4 or 5 months, YouTube's just taking more and more and more. But I have over 1,000 patrons per month for my articles behind the paywall. There is over 100 pieces of unique content and research information, analysis, and financial education. There was an article I just put out about the gold mining industry, the royalty and streaming companies, and when the gold bull market will end. Hint, there is a correlation that will come back regardless of paper price manipulation, because people are figuring out about the paper price manipulation. The central bankers the people in power got away with it for 7 years, but now more people are starting to become aware of it and the dips are being bought. But I think there's a really legit correlation here between central bank balance sheets and the gold price. We're going to start to see that correlation become pretty ironclad. So the paper price manipulation, it is very clear. I've been in this for over 10 years now. The paper price manipulation is becoming less effective. So the paper price smashes, knocking the gold price down, 40 or 50 bucks. In the past, these paper price smashes would have lasted weeks, if not months. Now they're lasting minutes or hours, if that. The dips are being bought. You can see it in the price action. You can see it in the chart action. Smart money is just accumulating inflation hedges because they realize the solution, and I'm using air quotes, that the central bankers and governments want, the solution that all these governments are looking at with way too much debt, is stagflate and tax and lie. That's the long-term solution. That's actually the best case scenario, unfortunately.